Welcome to The Explainer. Today, we're talking about one of the biggest shifts in finance, period. We're going to unlock the doors to what was once the most exclusive club in the world and show you how, for the very first time, you can actually get a seat at the table. I mean, come on, who hasn't, right? We've all seen those stories about the early investors in some tech giant and thought, wow, what if that could have been me? Well, for the first time in basically 100 years, it really can be. Let's dig in.
So, to really get how big of a deal this is, we've got to go back in time and see how things used to be. For almost a century, the most exciting, high-potential investments were kept behind this thick velvet rope.
And that's not an exaggeration. Investing in those young private companies, the ones that could deliver massive returns, it was basically a members-only club. If you aren't on the list, you weren't getting in. It didn't matter how great you thought an idea was.
So who was on the list?
They were called accredited investors. Now, this rule was set up way back in 1933, and the idea was supposedly to protect regular people from risky investments. But what it really did was lock 99% of us out of an entire category of investments, the very same one that was making the rich even richer. But then, the entire rule book got a massive rewrite. A new law came along that didn't just crack the door open. It basically blew it right off its hinges. For almost 80 years, that 1933 rule was the law of the land. But by 2012, things had obviously changed. Congress realized that small businesses and startups needed new ways to get funding, so they passed the Jobs Act. And the goal was pretty simple: help new companies grow, and in the process, finally open up investing to everyone.
And the real key, the thing that changed everything, was this one provision called Regulation Crowdfunding, or you'll hear it called Reg CF. This is the legal mechanism that lets regular folks, not just millionaires, invest directly into private companies. It's a total game changer.
Okay, so they changed the law. Big deal, right? But did people actually use it? Well, the numbers tell a pretty incredible story.
So when Reg CF first started in 2016, the market was tiny. Less than $19 million. But just look at that jump. It exploded to over $500 million by 2021 and has stayed right up there ever since. This shows it wasn't some one-time fad. That is some serious, sustained growth.
When you look at it visually, it's just staggering. It's not a gentle slope. It's practically a vertical line. This wasn't a slow build. It was an explosion of interest from both startups needing cash and everyday people wanting to invest. And to put a finer point on it, that growth works out to a compounded annual growth rate of over 52%. Numbers like that, year after year, tell you something really important is happening. This isn't just a trend, it's a real market being born.
Now, you might be sitting there thinking, okay, this sounds new and maybe a little risky. But what if I told you we've basically seen this movie before, and we have a pretty good idea of how it ends?
Do you remember peer-to-peer lending? About a decade ago, it was this small, kind of niche idea that let people lend money directly to each other, completely cutting out the big banks. At first, everyone was skeptical, but it turned into a massive trillion-dollar industry. And the playbook is, well, it's identical. P2P lending used tech to go around the banks. Investment crowdfunding is using tech to go around traditional venture capital. It's the same story of using technology to give people direct access, and it's following the exact same path from a weird niche idea to a mainstream financial powerhouse. Okay, so that's the history, the law, the numbers. But let's bring it back to the most important question. What does all this mean for you? Why should you actually care? Because this is where it gets really interesting.
For the first time, this opens up 4 huge benefits. 1, access to incredible growth potential. That chance to get in on the ground floor. 2, real diversification. You can now own private equity, an asset that doesn't just follow the stock market. 3, impact. You can literally put your money into companies you believe in. And 4, you get a real-world business education by being part of the journey.
And all of this leads to the single most critical factor, timing. Because this isn't some historical event, it's happening right now. And with any big market shift like this, the best opportunities always go to the people who get in early. And look, even with all that crazy growth we just saw, this market is still kind of flying under the radar. The analysis says it perfectly. It hasn't hit widespread public awareness yet, and that creates a unique window of opportunity. This is what they call the first mover advantage. Getting involved now means you get to see some of the best opportunities before the market gets crowded, before all the big institutional money floods in and drives prices up. You're simply ahead of the curve. You know, the best way to think about it is this. We are in that sweet spot right before this whole thing becomes completely normal. It's kind of like buying stocks online in the late 90s. It's happening, it's real, it's growing like crazy, but most people haven't caught on yet. So I'll just leave you with this thought. The next generation of companies that are going to change the world, they're getting their funding as we speak. Not in some fancy boardroom, but on open platforms, from people just like you. The only real question left is, are you going to be a part of it?